Hey, guys, ladies and gentlemen, pleasure to be here once again with Radovan. Radovan, first of all, it's a pleasure meeting you. Um, and that's first and foremost, and of course, I get very excited by your participation today within our show, the Trade Pod. So before we start to deep dive into the backbone of how do you see the world of auto trading, I would like to ask you, man, um, a little bit about yourself. So tell the audience and to me a little bit about yourself and a little bit about your background and where you came from and so on and so forth. So we'll be able to meet you better.
Hmm? Okay. So thank you guys that I'm allowed to be here, and I'm glad for that.
It's our
So
pleasure.
yes,
Thank you
thank you.
for
So
being here.
firstly, thank you. So firstly, about something about myself. So at the moment, I'm head of research and CEO at the company called Quantpedia. So we are the research-only company located in Central Europe, in Bratislava. So if anybody knows how the Europe look like, I mean, we are just in the middle of the Europe. Now, uh, something about myself. So I started trading plus or minus 19 years ago, 2005,
Like
2006.
yesterday.
Yeah, nearly like yesterday. I'm old. I'm not very old, but I'm older than I look like. So when I started trading, I was trading my own account, and after a while, I realized that if I want to move and I want to learn more, I need to get employed. So I was looking for opportunity to find a proper trading job, and I was employed as a middle office manager in a local asset management company. I mean, when you are a middle officer, you are basically working with the data. So your job is to take care the data are correct, that you are calculating the duration, you are calculating yields of the portfolios, you are calculating what is I mean, the impact of the change of some variable in your portfolio. I mean, what is the performance of the portfolio, etc., etc. So you are helping portfolio managers and traders to get their stuff done. So that was my first job. I was doing a lot of the risk management tasks. So I was calculating maximum drawdowns. I was calculating what are the exposures of the portfolios to the market scenarios and stuff like that. But I always wanted to move to portfolio management, and after a few years, I was able to get a portfolio management task. So I was managing some of the funds that were mostly dealing with asset allocation strategies, trend following and stuff, market timing and stuff like that. When I was the portfolio manager, I was responsible for building my own strategies. And I mean, at the beginning, I was looking for ideas in books, and that was like interesting way how to do that, but very inefficient because I mean, you have 300 pages long book, and there's one idea that you can use in a trading. So it was not very efficient. So very quickly, I found academic research, which is significantly better because it's more dense in information. So it means you don't need to read 300 pages, you just need to read 50 pages. And you will get one trading strategy if you have a luck and you find a good paper. So I started to find looking for papers. I started to write the notes. What is interesting paper? What is the strategy? What is the performance? What is the backtest period and stuff like that. And I mean, from those notes, the first version of Quantpedia was born. So I left the asset management company in 2015. I started to focus solely on the research. And at the moment, we are a small research-based company. We are all together plus or minus 8 people. We do not manage any money. We are researchers. So we look for ideas, we backtest ideas, we do the consulting, we help our clients, hedge funds, mutual funds, high net worth individuals. Uh, I mean, to build better strategies, to improve their existing strategies, to build better funds, etc., etc. So our goal is to build a bridge between academia and professionals. I mean, most of the people who deal with the traders, they think that I mean, with the professional traders, I mean, the traders who actually run the fund, that are employed on the fund. Most people think that, external people think that those portfolio managers, they do the trading 24/7, or, all of the day they are in the work, they actually stare at the charts and, calculate some position or do the backtesting. But that's not the truth. Like 70% of the work is basically operation. So you meet with clients, you discuss with the clients, you have the meetings, you attend the meetings, and you have like few hours a day to actually look at the market or backtest something, and you don't have a time to follow all of the academic research. So this is where Quantpedia comes in. So we are following all the academic research. There are around 10,000 papers published every year about quantitative trading, algorithmic trading, about all of the sorts of trading strategies. So we are going through all of that research. We are looking for ideas that make sense. And we are extracting those ideas, putting those ideas into our database. We are backtesting those ideas, doing the verification, etc., etc. Because when you write something on a paper, you can write anything on the paper. So we are doing the verification, and our clients are mostly professionals, so funds, hedge funds, mutual funds, family offices who are looking for new systematic idea that they can employ in their fund, or for their clients or whatever. So that's what we do.
So
So we are,
basically, what you're doing in
yeah,
Quantpedia, you're taking academic research and you're trying to apply it to a systematic approach, trade the market in order to enable your clients, hedge funds, family offices, super successful private held management companies to trade the markets algorithmically. Is
yeah,
that what
yeah.
you're doing? You're like bridging the gap between the academic world to the world of money, basically.
Exactly, exactly. But mostly our clients are already trading algorithmically. So what we are doing is that we are saving their time. So they do not need to follow all of the academic research because they can take our
So they
product.
do have a background in algorithmic trading.
Yeah, 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 yeah. They are 99% of them. They have the background in algorithmic trade, so they are already trade.
99.
Yeah, so they are already trading algorithmically, or if not algorithmically, at least systematically. Because there are like in my way there are like two approaches. So you can be systematic trader. By systematic trader, it means that you have a strategy, you have a setup, which signals you will take, which you will not take. You have some backtest, so you backtested those signals, and you know that you have an edge because I don't know, your backtest shown you that you have a performance. Uh, so you are trading systematically, but it doesn't mean that it must be algorithmic. So it doesn't mean that your strategy must be coded in a code that it run automatically. You can still take your trades by your own by sitting next to the computer and entering the trades. As a human. Uh, but your strategy is systematic. So it means it's not based on some gut feeling when you get up in the morning and you read the news and you realize, yeah,
Yeah,
today I
of
feel
course.
that I will buy, I don't know, Apple or something like that. So
I have a question.
yeah.
I have a question. I have a question. Well, they don't get the exposure to the video. They only get exposure to the audio experience that but it was funny the way that I raised my hand in order to ask you that question. So I will tell you something like that, Radovan. Out of an assumption that your clients pretty much manage an incredible amount of money under an incredible amount of market circumstances, I would like to ask you, out of your experience, um, how how should you as a quant engineer need to build a systematic trading system in order that in order that you will be able to manage um, 200, 300, $400 million in under a position or in a diversification, so you'll be able to actually make money and to not risk your entire capital because again, I'm going out of the assumption that your clients might be managing a ton of money.
Hmm.
Um, and you will need to provide them with an incredibly perfectly fit systematic trading system that basically addresses their needs. So how do you build such a system that first provides care for their management, for their money management, and secondly, of course, they'll be able to make money and much more percentage than the S&P. Otherwise, they will have no necessity
Yeah.
within that system.
So I mean, it's like incredibly difficult question because
That was a difficult question.
yeah, I mean it's
So,
incredibly
so I'm sorry.
no, I mean
But
because
you
no,
told me yes that you would like to participate within the trade pod, but you
no,
knew
no,
that
no,
it's
no.
not
I
gonna
mean,
be.
incredibly difficult question because it's not easy to answer because I mean we can be answering this for an hour. So
Yeah.
what I mean how to get to that from the beginning. So firstly, when you are building the strategy and when our clients are building the strategy, you must have the fundamental reason why the strategy should be working. So I mean because in the long term, of course, the markets are usually going up because the economy is going up. So, I mean, in the long term, when you buy S&P 500, you will get exposure to the best companies in the US, and you will earn some money because, I mean, those companies they provide the products and they sell the services, and you will get dividends out of those services. So, I mean, that's the why the capitalism works. So, I mean, in the end, you will earn the money. Now, the question is, if you want to earn money in the short term and earn more money than S&P 500, you must be better and brighter than all of the other that are on the market and that are participating in the market. So in the short term, it's a zero-sum game. It's the same game as the game of the poker. And in the game of the poker, when you enter the table, you must understand, I mean, who the pots is. I mean, who is the one who will lose the money, and money of that guy will be distributed among all of the others who are sitting in the table, in the poker table. So, I mean, the finance, it means that when you have a strategy, you must understand the fundamentally what is that strategy about? Why it should gain the money? And who are the market participants who will pay that money to you? And if they do it, I mean, if they are doing it, I mean, are they doing it willingly? Or are they doing it because, I mean, they are making a mistake because they are not valuing something correctly? And if they are not valuing something correctly, why they are not valuing correctly? So, I mean, you can find a strategy, but you must understand the strategy really good to I mean to build it
You
well.
need you need to find a fundamental reason
Exactly.
for the strategy to work, right? So,
Exactly.
my question is, how would you evaluate if your strategy fundamentally could work over time, and on what when you're reading the academic pages, and you start to brainstorm with yourself of how you can build a new systematic approach to futures, forex options, so on and so forth. I would like to ask you, how would you evaluate a trading idea, fundamentally speaking, before that you're starting to construct a strategy behind? So I think that that may be easy or otherwise
Um,
incredibly difficult mission.
uh,
Um, but what do you
so
think about
so I mean at the end the fundamental um, I mean fundamentally at the end the only measure that makes sense is the performance of the strategy. So I mean you can do any kind of guess or you can calculate anything before you run the strategy, but at the end, the real money or a real test of the strategy is when you employ the strategy and let it run out of sample. So that's like the final test. So to have like portfolio that's performing well, it means that you need to have more strategies because just one is not enough. Because you cannot be 100% sure that your strategy that you built, even that it has some fundamental reason and it has nice backtest in the past, that it will continue to perform in the future the same way it performed in the past. So, I mean, to avoid this problem, you need to have a portfolio of strategies. So you cannot have just one. You need to have like, I don't know, 10 or 20 or something like that. So that you have like multiple strategies, and in case some of them will go bust, you will remove them and you can, I mean, create a new one. So, I mean, the process of managing the fund or managing the portfolio is like continuous for a process forever in which you continuously find new ideas, develop new ideas, test those new ideas on the real money. And if, I mean, those ideas not working, you are throwing those ideas away and finding new ideas. So, I mean, that's the ultimate test. So there is no other test that the only way how you can find the strategy is fine is that you will employ your money and you will gain some money out of it. Of course, there are some things that you can try to guess before if the strategy is working fine. So it means, yeah, you can check what was the Sharpe ratio of the strategy, if it's robust. So if you change the parameters of strategy, if it doesn't change a lot, then it's robust, and you can have like some higher uh, hope that it will work in the future also, etc., etc. But I mean, ultimately, only the one out of sample test will show you. So I mean, that's like the result, or
That's the main
yeah,
that's
yeah,
the
yeah.
main approach.
Yeah, that's the main approach. That's the main approach. And you must have like multiple. So I mean, this means that you need to have multiple strategies, not just one. You can have one. You can be the lucky. You can earn a lot of the money with one. Uh, but I mean, that's not the systematic way how to do that. Because you just can have luck. So you need to have more, and ideally they are not from the same kind. So it doesn't make sense a lot to have, I don't know, 5 or 6 or 10 different arbitrage strategies, because sooner or later they will be correlated to each other, because some event will come up and it will in the future it will, I mean, affect those strategies in the same way. So it makes sense to have the strategies that are fundamentally different. So you can have an arbitrage one, you can have a momentum. I don't know, you can have a market timing strategy, you can have a seasonal, and you can mix them together. And I mean, the least correlated those strategies are to each other, the better your portfolio will be.
I get it. I get it. By the way, I would like to ask you a question. Well, I do have a big screen in front of me, and before the podcast, you do a small preparation before you jump on the call, and I saw that you're literally providing a list of all your trading within the Quantpedia.com .com website. And the first strategy that comes up to my eyes is asset class trend following, period of rebalancing is monthly, markets traded, it's bond commodities, equities, and rates, indicator performance 11.27%, volatility is 6.87, and keywords asset class picking momentum trend following. I would like to ask you this. First, why would you provide free strategies to the public, basically? Because a strategy might be incredibly beneficial to all of our pockets here. Secondly, I would like to take that strategy in particular, and I would like to ask you for an example, basically. How would you start to construct a trend following strategy before even the construction phase started? I'd like to ask you, how would you plan your strategy? How would you plan a structure? How would you identify the right steps? Because each strategy get traded on a different markets. So how do you predefine your steps in order to build the perfect strategy to the market that you would like to trade on?
Mhm.
I think those questions might impact the entire process.
Mhm.
Overall, those are the steps that you might follow.
Mhm.
So first, why would you give them for
Yeah.
free? Second, how would you construct them?
Yeah. So firstly, so we have a freemium model. So it means we always had a freemium model. So we have around over 1,000 strategies and papers in our database, and around
Yeah, I
80
can
of
see
them, yeah, and around 80 of them are available for,
more than 1,000.
yeah, and over 80 of them are available for free. I mean, the papers that are available for free are basically the papers that are well known. So I mean, it doesn't make sense to put them behind the paywall because I mean, your first example, the asset class trend following is a paper that was written by Mabel Faber in 2006, and is the most downloadable paper on SSRN with I don't know 200,000. I do not know the exact number, but I mean, it's like the most popular paper on SSRN related to quantitative trading. So I mean, it doesn't make sense to make some secret from this paper. So I mean, yeah, we have a secret behind the paywall, and please, I mean, buy the subscription because we have a Maben Faber's paper in our database. I mean, doesn't make sense. So the papers that are for free are basically the uh, let's call them mm, cornerstones or the most basic papers that you should know about when you would like to start with systematic investing or algorithmic trading. So I mean, before you buy Quantpedia, whatever premium pro prime product, I mean, read those papers first because you will get a lot from them. You will learn about different styles, you will learn about different approaches, etc., etc. And then, if you feel confident and you would like to know about something that's less known, rare, etc., you can, I mean, get there. So that's the reason. And our clients, as I said, our clients are professionals, so they are looking for the papers that are less known. So that's the reason why we have the premium service, etc. Uh, Okay, and now regarding the second question.
I
How
do like to give a question in a
yeah.
double formation.
Okay, so regarding the second, I will first answer the second and then continue. So how to build the systematic strategy for the particular asset or particular market. So my recommendation is study. I mean, first do study or do your study. So go on the website, go on the internet, go everywhere, go on the Google, try to Google trading strategy, crude oil, whatever. And I mean, try to learn and find as most as you can, because there are a lot of the things that are for free out. And what it will do for you is that you will understand what's the boundary of the current knowledge. Of course, you will not find all of those strategies for free on the internet, but you will find some that are useful. You will find a lot that are not useful, but you will find some that are useful, and you will know what is the boundary of the current knowledge, what is out there. And even by knowing what is out there, you can combine those things and you can build something on your own. And once you know what is out there, what is the current boundary of the knowledge, then you can try to push the knowledge a little further. So you can try to use uh, your ideas about how the work or how the world works, or you can find, I mean, some idea from the book, etc. And you can try to combine multiple ideas together, and you can try to come up with something, I mean, totally unique. Uh, so I mean, just to give you like example, how does that work? For example, is that Yeah, for example, crypto market is especially popular at the moment. So there are some strategies for the crypto market. Some of them are explained in academic research, etc., etc. So you can find them online very easily. Uh, but I mean, the crypto market is just the equity market on steroids. Uh, so there are some of the equity strategies that are known in equities, but they are not described in a crypto. So you can take those strategies from the equities and you can very easily translate them into the crypto market. And they are less known in the crypto, they are less used in the crypto, etc., etc. Because I mean, you can move from one asset class to another asset class. So you can take idea from one asset class, and you can try to test this idea in another asset class. So you can try I mean that's probably the easiest way how to come up with the strategy. But I would start with the research, with the understanding of what's already there. And I mean by
That's a
understand
brilliant example, by the way.
yeah
That's a
yeah
brilliant
by
example.
understanding yeah, sorry, just a second. So by understanding, I do not mean that you will spend on a Google 20 minutes or 1 hour. I mean, by research, it means that you will spend on a Google 1 month. So you will Google 1 month, you will look, read, and you will spend 1 month by looking for something. Because it's always cheaper to do research than to learn on your own mistakes with your own money. So so
Yeah, of course.
that's the time well spent.
Mhm. I will tell you something like that, Radovan. First, I really appreciate the insight that you have provided right now. I think that those insights were incredibly significant because they had big meaning behind. Um, so that's the first thing. Secondly, I would like to step out of that conversation that we have managing for the past 30 minutes, and I would like to ask you a different question. By the beginning of our conversation, you have mentioned that you're working closely with family offices. By the way, fix me if I'm wrong. Family offices, hedge funds, privately held companies and so on. And I would like to ask you, out of your perspective as the CEO and founder of Quantpedia, how it how, first, how do you acquire such customers? What do you need in your toolbox in order to convince them that what you have in mind is worthwhile? And how do you convert those potential leads? And each lead might have incredible amount of liquidity within their bank account over obviously. What are the steps that you take into considerations before acquiring them into paying customers?
So I would tell it this way. So focus on one thing and try to be the best in this one thing. So I mean, for us, the way how we acquire our customers is that we are trying to be the best in the thing that we are doing, and it's the thing, one thing, and it's understanding of the academic research and translating the academic research into actionable ideas. So that's our niche, and we are one of the best in this niche. Uh, and once you are one of the best in that niche, I
Who
mean,
are your competitors? Who are your main competitors within that niche?
I will not name them, but I mean, there are
Yeah,
like,
no,
yeah,
obviously,
yeah,
of
but they
course
are,
you won't name
yeah, yeah,
them.
but they are. I mean, they are the companies. I mean, there are a lot of the companies who are doing the plus or minus similar thing. So they are offering the products to institutional investors. They are building factors based from academic research. They are building the factor libraries, and I mean the investors can or the institutional traders they can go through the list of factors. They can check. I mean, how are the factors performing? What are the correlations of the factors, etc., etc., etc. So I mean we are not the only one, of course. Uh, So, but I mean, all of all of those companies, us included, what are we trying to do is that we are trying to continuously improve ourselves. So it means uh, pick one thing and try to be the best at this thing. So I mean, you are not able to do five things great. I mean, great. You can do five things on average, but I mean, from those five things, we pick the one thing that's, I mean, the most important and focus on that. So that's the reason why, for example, we are not managing the money. We are just focusing on the research because I mean, if I was managing money in the past, so it has nothing to do with. So I understand the business properly. I understand how the business works, what are the numbers, etc., etc. And we are focused solely on the research because if we try to start managing the money, it would dilute our focus. So we would start to deal with the customers. We will start to explain customers what is market doing, why it is doing, etc., etc. So we'll start to focus more on the customer feedback, and the customers would not be professionals, but I mean, it will be the clients who are less known about the market. So we will lose focus uh, because we will move out of our circle of competence. So I mean, if I have like one, mm, not idea, but I mean, one recommendation is to focus on just one thing and to be good at or the best in that one thing. And in our case, it's the research. So we are focusing solely on the research. We are reading thousands of papers every year, backtesting thousands and hundreds and thousands of papers every year, understanding what are the new trends in academics, what are new factors, what are the new strategies that are interesting, etc., etc. And that's what we do. I mean, we are trying to
So
do that.
basically, so basically, your competitive advantage is how you leverage those academic articles to like in a much more informed way and understanding of the market itself.
Yeah.
That to me sounds interesting, but so basically to break it up, what you have just presented, you approach people that have already got interest with algo trading and to put their money within an asset that might convert their money better than the S&P or better than any other index out there that can offer a great ROI. So I think, people that comes with the same state of mind that they like for such a service. I think, it's not easy to get them found basically. So I would like to ask you, looking back on your on the milestones of Quantpedia and how you build it and how you built and constructed the entire company. Um, what was the greatest milestone that you think looking backwards that have helped you to build Quantpedia to the place that it is today?
Yeah, so I would say that definitely the first and the best step that I did in the past was that I realized that I can do that by myself. So I mean, the first day I found uh, other guys and girls. So I mean, I have also the quant analysts who are the girls, and they are good. Uh, so the first day I realized that I want to work with somebody uh, was the day that I moved Quantpedia on the higher level. Because by that cooperation with other people and with the discussion, uh, I was able to get the faster feedback. We were able to build the product faster, and it also gave me like uh, how to tell it, the motivation to improve the company itself. because I started to work with the people and they liked working with me. But when you are working with the younger, I mean, with the younger people, I mean, they are growing very fast. So they acquire knowledge very fast. And after a while, they had so much knowledge that they were no longer juniors. I was not able to, I mean, give them like the uh, proper amount of money to stay with me because my company was small and was still in a small stage. So I realized that I want to work with those people longer because they are very, very skilled. And to have those people longer with me in my company, I need to grow my company. So,
Mhm.
uh,
Obviously.
so that was exactly. So that was the motivation to grow the company, and we became the better for that reason. Uh, so uh, so that was like the first milestone. It was the best thing that I did over the last, I don't know, a lot of the years. So that I started to work with other people. I started to employ other people, and uh, and that was I realized that I cannot do that by myself, just with the help of, I don't know, freelancer for a few hours a week that will build something for me, or I don't know, some freelancer copywriter or somebody like that. I need to like employ people and get them on the board with me.
Brilliant. I think, you know, I will share my experience as an entrepreneur in the beginning of building a company. I think that like the greatest milestone that I have stepped is definitely the people. And once you have mentioned that you acquired people, and within within a matter of time, you had like incredible amount of knowledge among your people, and they grew so fast individually to contribute to the company. I think that I can definitely relate to what you're saying right now because that's the main factor that indicates entire drop down or a greatest victory for the entire company. So out of your perspective, I would like to ask you another question about like how do you manage such a company? Once you get your people and your team acquired instead of Quantpedia, how do you drove their motivation in a way that will enable them to learn fast and to absorb as much as knowledge as they can in order to bridge the gap between the junior to the senior within a small amount of time?
So I mean, it's hard to answer that because we are not like ordinary company in a way that I uh, have to motivate them very much or something like that. So I'm like very, or I think I'm the boss who is not managing them a lot. So I do not tell them to grow fast. I try not to be like too bossy on, I mean, to be like to step on their toes or to look over their shoulder what they are doing. So I'm trying to let them choose their pace uh, because I think that's better at the end uh, because I think the internal motivation is more important than the external, and I'm not able to give them enough external motivation, so they have to have their own internal motivation. Uh, so I mean, what I'm trying to do is that I try to have the doors open, I mean virtually, because we are not sitting in the same office, but I'm trying to have the doors or open virtually so they can come to me and ask questions anytime about anything. And I try to give them honest answer. And if I do not know, at least to give them the direction in which they can learn something more. So that's the main way how I do that. Uh, so I try to be I do not try to be for them like the boss. I try to be for them like somebody from who they can learn. But learn by I try to learn them by showing them how to do that, not by telling them how to do that.
I get it. All right. First of all, I would like to thank you, Radovan, for your participants within our show, the Trade Pod. Um, I enjoyed the conversation we had because we, it's rarely happening that I'm having conversations with people that comes to be a guest within our show, about like how they manage and how they approach themselves as managers and how they look at things and how they acquire customers and how they value prop and how they see their value proposition as an entrepreneur or as a company. So for me, it was an incredibly beneficial conversation and really thoughtful and learning conversation as well. So first of all, I would like to thank you for your participation within our podcast. Um, and thank you for being here. I really appreciate it.
Yeah, thank you very much, guys. It was a pleasure,
Thank you.
and it was
Really.
very 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 interesting.
Incredibly. Yeah, it was a pleasure having you here, Radovan. I hope that these episode will get exploded as fast as possible, so we will be able to get on part B. So thank you. We'll be in touch very very soon, and it was incredibly episode for the Trade Pod. Thank you everybody for listening. Goodbye then. Bye bye.